Okay, we can get underway. Welcome, anyone. Thanks for joining. And I'm Dave Hockhauser, the Chief Revenue Officer for Hub Security. My company designs extremely secure hardware and software cybersecurity solutions, and in particular for digital assets as well. At the last minute, actually, our moderator just came down ill. We found that out a few minutes ago. So I'm going to switch and become the moderator now for similar discussion, though. So I think everything should be fine. Let me give you, I'll introduce both players, and I'll have them introduce themselves as well. But let me at least give you kind of a 1-minute overview of the purpose and what we're doing here today and why we picked this particular area and the experts to focus on. One is we're having a session both with Julie and Beth to discuss kind of banking, digital assets, and regulations associated with it. And the real reason is there's a ton of activity around digital assets, as everybody knows, and really rapid changes going on constantly. New regulations are obviously constantly changing. Assets are being introduced all the time, new offerings, new players, and everything. So a lot of these efforts and changes is just really due to really all the constant stream of assets. I mean, you hear it all the time, and the new players. Some of them are legitimate. Some I think are a little bit more risky than others. And so two major efforts to really legitimize the cryptocurrency industry as a whole and mitigate the rest is one, the entry of banks and creation of specific banks around digital assets. And the other one is the introduction and refinement of the regulations that are going on. So in this particular session, we'll focus on setting up, literally setting up a bank focused on digital assets and the current regulatory environment with who I feel are two really superb players in this market. So, and we might touch upon some unique risks as well that comes around that, and cybersecurity risks around the digital assets. So with that, hopefully sit back, enjoy. Feel free to type in questions. We will definitely answer the questions, whether during the session or right after some of our own discussion. So feel free all along as you want to do that. And I think I'd like to start off with Julie. One, both if you can introduce yourself, and then two, maybe give also along that line kind of a brief overview of the Wyoming Deposit and Trust and Transfer Bank and kind of the products and services that you offer, and spend a little bit of time on that. And then we'll have Beth go ahead and introduce herself.
Sure, great, thank you. Hi, I'm Julie Fellows, and my background includes being a regulator with the Office of the Comptroller of the Currency. That's really how I started my career in financial services. I've had a long career in financial services and been in leadership roles, both within regulated and non-regulated entities. And so I'm really excited about this new, the way that financial services is evolving. I really feel that the future of finance is digital. And that's why I have moved into this space and taken on this new exciting challenge, which is starting a new regulated entity that is involved in both fiat and digital assets. So David, as you mentioned, the Wyoming Deposit and Transfer Corp. I am a co-founder and CEO, and we are a newly chartered bank in a state bank in Wyoming, and it's under an SPDI charter. That's a special purpose depository institution charter. We're only the third ever entity to receive this charter, so we're really blazing a new trail in the regulated digital asset world. WDT will seamlessly and reliably bridge the gap between traditional banking and the rapidly evolving world of cryptocurrency and digital wealth. David, you mentioned the significant change that's happening, and we really feel that a safe, robust financial entity that is regulated is an important component in bridging that gap. So we will have that safe, robust financial platform It's very secure. We enjoy the dual ledger blockchain system, and will be powered by best of breed technology in a single solution. Our clients, what we provide to our clients will be commercial banking and digital asset management in white glove customer care all in one place. So, the last thing is that because our charter is granted in the state of Wyoming, which is the most crypto friendly state in the nation, our customers are free to invest and transact in both digital asset and fiat with confidence and security, knowing that they're in a fully regulated environment.
Great, thanks. Thanks, appreciate that. That actually sounds pretty interesting. And personally, I'm looking forward to the assurance of working with a bank in crypto than some of the other players. Hey, Beth, I'd love it if you take a moment to kind of introduce yourself and give a little bit of background as well.
Sure, David. So I'm Beth Haddock. Thank you for inviting me to participate today. I think I would start by saying I love being a trustee and an advisor. I have my training in traditional finance, much like Julie. I spent a lot of time first as an executive and an attorney at insurance companies, AXA namely, then in banks, namely Brown Brothers Harriman as the head of compliance and also a legal advisor, and then at a hedge fund, Guggenheim Investments. So my training is steeped in traditional finance and legal advisory. And then more recently, I decided to become an entrepreneur, and I founded my own consultancy where we really help with regulatory strategy for those entering this pretty exciting space of digital assets, blockchain, and then some in the traditional finance as well. I, like Julie, am affiliated. I am a trustee for a New York State regulated entity. So I am a trustee on a subsidiary of GMO Internet. So GMO Internet is a publicly traded Japanese company. In order to get into the stablecoin space, they have a regulated entity in the state of New York, and I sit on that board. It's the only yen pegged stablecoin. There's also a US dollar stablecoin that the subsidiary is really designed to offer into the market. I think we'll get into some of the stablecoin wars. There's lots of interesting products in the space. I guess I want to also thank Julie specifically for collaborating and reaching out. That's why we're both here today. And I look forward to hearing everyone's questions.
Yeah, great. That's pretty interesting background. So let me start off. I'll ask kind of the first topic around kind of the needs in the industry around kind of regulations, and maybe first Beth, and then sure Julie can kick in. I know we hear a lot of discussion. We're racing around, regulations. Let's look at the regulations and refine them. But curious what you think might be a first, the right steps to take in the approach. There's some discussions even potentially. Let's understand what the products are and what's out there and what people are doing even before we jump into it. I'm not so sure there's a clear understanding, but curious what your thoughts are on that topic, on the best way to proceed here.
Yeah, thanks, Dave. I think I really have 3 points for the audience. Number one, I'm a chair of the National Society for Compliance Professionals, NSCP. We have a roundtable that focuses just on blockchain and fintech because it is very confusing and hard to figure out. So that uncertainty, as well as I'm an author of a book about how to build compliance programs so they're not bureaucratic, has me really sort of worried about this one topic. So number one, I would say the uncertainty in the market in and of itself creates risk, which as long as it's temporary, I think it's fine. And one way that I'd offer that we can together try and mitigate that risk is educate the regulators. Because if we're focused on talking about which entities should be regulated and which entities shouldn't, and what are the risks, let's say, just for anti-fraud, because that seems to be the main one that we're all focused on currently, I think we really miss an opportunity to pause and to make sure before we start making rules that we understand what the products and services are, because number two, there could be unintended consequences. And what do I mean by unintended consequences? It's sort of what I alluded to about building compliance programs where compliance officers are spending a lot of time and money and effort on a program that's actually not mitigating the material or the top risks because the regulation was either a misfit, it was relied too much on the traditional framework, or just a misunderstanding in light of time and a sense of urgency to go ahead and regulate. And I think the third point, and I'm really interested in hearing what Julie has to say, I think she and I, despite the fact that we're sort of not almost bi-coastal, but between Wyoming and New York, right? It's a really good example of, you can have, America is amazing, right? It's big. There's like this big capitalist energy. We are the country that really, when you think of the tech industry, you really want to keep the hub of this blockchain. I think of it as like the next level. I think, as Julie said, the future of finance. And the third point would be, if we don't move and educate and be very careful, we could inadvertently force that next hub of finance away from America into other countries that are willing to pause and to understand the products and services, and rather than prohibiting them, figuring out a smart way to regulate them so the material risks are the ones that the compliance officers and the business are really focused on. And I think ours is a really good use case between New York and Wyoming and even some other states in America that that there's a lot for us to talk about today.
Yeah. Interesting. That's good. Makes total sense, and I realize it's frequent. Very few people understand, really have a good understanding of the market, I find, and especially people legislating, it is hard to stay on top of. So. Well,
I think, yeah, and I think your introductory comments were spot on, which is it's evolving, it's changing. So if you're not focused on it, and it is incredibly vast, so a vast, evolving and changing sector, it's complex. Yeah. Yeah, and in one sense, bumping up against an extremely conservative group who deal with handling the money supply. Innovation running up against conservative is tough sometimes. Yeah, Julie, I was wondering if you have any more thoughts on that.
Yeah, I would say I absolutely agree with the points that Beth made, and I think that education and creating thoughtful regulation, and I think that really starts with both regulators and industry understanding the products and services, better understanding blockchain technology, what it can do, what maybe some of its limitations are, and then looking at the broader risk profile and understanding the perspectives of different players within the industry, both those that choose to be regulated, those who will not go through the regulatory process, but will be involved in the process in some shape or form, and really understanding both big and small, traditional and non, what are the voices of the industry. As Beth said, it's so quickly evolving and complex. It's very important for there to be a clear understanding of that before regulations are implemented, which I do think can have a very negative effect in stifling the industry and perhaps causing a lot of time and energy to be spent on things that really are not addressing the risk. So I think that is the way to start education, working together, a thoughtful process to understand, and making sure that we continue to innovate in this space. And I think to Beth's point about the United States leading this from a technology perspective, I think it's fabulous. And I also see that there are other countries or blocks around the world, the EU, other financial overseers that are really being proactive and establishing a framework. And so I think that the US needs to both make sure that we are doing that within the US, but also so that it is transferable and meshes on a global scale.
Well, yeah, definitely makes sense. And I've seen, quite a bit of difference between different countries, which is amazing. Well, and switching it kind of a next topic on kind of the needs, we look at regulations around the digital assets and around protecting the industry. In a sense, we look at anti-money laundering and anti-fraud measures. What about the other way? What are your thoughts on kind of protecting the investors as well? I know, what's tolerance of risk, what's being offered. I know sometimes you just buy a mutual fund and you get advice. Hey, this is very risky. This is moderate. This is less risky. You get some advice, but any thoughts, should we even head in that direction, or what we should be doing on that? We could reverse it this time and let Julie go first.
Sure. I think regulation, again, thoughtfully implemented is really important. So both the importance of a regulated financial institution that provides safety and soundness, but that those regulations are there for a reason to help to protect the users, the consumers, if you will, whether they be businesses or individuals of those products. And I think that there's this is a complex area, and for those who are not experts in the space, there is room for bad players and for fraud to happen and for people to lose their funds. And so I think that by increasing the structure around that to mitigate those risks and to help provide transparency and information so that people can make wise decisions, informed decisions based on real requirements.
Oh, interesting. Yeah, that's good. By the way, as you're saying that, I was just thinking there are always people too who ask me, so what do you think about this crypto environment? Should I invest in it? Should I not? Which is a pretty loaded question. Personally, the only thing I can answer that, and without a long explanation to teach them, is to say, look, if you don't know anything about it, you could go to Las Vegas as well and put money down. It's about the same level of risk. The education is going to be critical, but maybe there are things to regulate, to help us. Yeah, Beth, I was wondering if you had any further thought. Oh, go ahead, Julie, if you have more on that. Yeah, Beth, if you have any further thoughts on that.
Sure. A couple of comments to some of Julie's, and then just more broadly. I think it's great when you look back at the last couple of years, the OCC tried to be proactive. You've also heard the new chair, Gary Gensler, talking about compliance is more than just AML. Commissioner Peirce has talked about, as the crypto mom, she's talked about the fact that trying to prohibit the demand and really instead focusing on informed decision-making, as Julie said, is really important. And just anecdotally, maybe others on the line are also this, but I'm basically my own version of a crypto mom, where my son and all of his friends, okay, so you think about people, he's older, right? But you cannot stop the investor demand. They may hypothetically have accounts with entities that are not permitted to do business in the US. They also may be residents of a state and have an account with an entity that's not permitted to do business in New York. Hypothetically, they might have opened up an account before they should have been able to get through the KYC process. And it's been really interesting as someone who's in the space as a regulatory and a legal expert to sort of have these antidotes. And I think it's real. I'm hopeful that everyone at this point in 2021 who's in the regulatory decision-making roles understand that it's a momentum one can really not stop. And to think that you're going to discourage that demand, I, at least from where I sit, I think we'd be better served by putting that aside and going directly for what Julie said, which is informed decision making. And from my perspective, as we work with folks, and if one is a money transmitter or a money services business, and they're with FinCEN and they're only focused on AML and KYC, and they're not fully regulated like the entities that Julie talked about in Wyoming or the entity I talked about in New York, that's a big gap. That's a big gap if you have all of this momentum and you've got all these folks who aren't going to stop from opening up accounts, right? I feel like we really need to move past AML and move into maybe it's transparency about products. I think I mentioned in my intro the stablecoin wars. I think that's awesome. Now there's a discussion before there's a crisis as to whether or not there's enough rigor behind stablecoins like the Circle stablecoin as compared to Julie's entity. And like there was even press where we're talking about, yeah, we decided we are going to apply for a federal banking charter. And I thought, great, this is like, it's a good story. It's an important one for people who are jumping in and thinking about what framework they want. But I'm really glad you asked the question, because I feel like we're at a point where hopefully many are at the point where they realize you really can't stop the momentum. And we already have investors who, there was this great New Yorker article, I don't know if others read it, where what people do is they just go on Coinbase or whatever platform they're on and start to buy everything, and they have no idea. They might not even realize when they buy a stable coin that it's actually a stable coin, and they might not buy a coin that is a fraudulent coin versus one that there's actually a lot behind there and a lot of transparency. And in some respects, Julie probably saw this as her time as a regulator. I know I saw it in the securities industry, where it's not that unlike microcap securities or penny stocks. As we've seen this before, which is everyone loves a good success story. So as long as, at least from where I sit in my position, if the regulation is focused on putting the right guardrails instead of stopping the momentum, I'm really optimistic about the next year or so.
Yeah, I do think it is unstoppable. But yeah, definitely a lot of things to simplify it, even technically, as well as regulatory. It's not an easy thing for somebody to go set up and figure out how to do, who doesn't understand what's going on.
Yeah, it's true. Like the same people I was talking about, I'm always like, don't leave it. They have a vault, right? And this is probably to Julie's point about if you have a full banking license, it's different than if you don't. But saying don't leave your coins in your wallet, make sure it goes to the vault, because when you look at all these security breaches, they're real, right? They're real risk.
Yes. And I think that actually, just as a side thing, brings up a lack of almost maturity in people's knowledge and the industry and some of those things as well. If you had $1 million in cash, you wouldn't necessarily put it in your wallet at home or just, put it in a drawer somewhere. You'd go to a bank and deposit it. None of that. You wouldn't expect the bank to just put it in a teledrawer or just make a note on a local laptop somewhere with a Norton firewall. You'd expect it to be pretty well secured. And that kind of rigor, in some places exists, but in a lot, I think it's a matter of maturity and people understanding what they're doing, and it leads to a lot of the problems we see as well.
Yeah, and it's interesting as we watch, if you're getting into the business and you look at the legal agreements that you see between perhaps your service providers, and you're not careful, you could sign an agreement that shows that lack of maturity because there aren't any reps or warranties about the security or about how one is going to handle a breach, which are important concepts.
And that's why I think that the points that you're making are so important, because I think there is a lack of sophistication on the part of many who are so excited to get into this industry and get involved. Some of them are very sophisticated. So I'm not saying that it's across the board, but I think there is just enough risk there for people just in moving, purchasing, moving the asset, safe on and off ramp, being able to hold that in a safe custody. And really those that are fiduciaries and responsible for other people's money really need to have the safety and security of, I feel, a regulated institution, and specifically qualified custody that meets the SEC requirements. And I think that as more and more professionals and institutions become involved in the investment, they will certainly move to the qualified custody and the benefits of the stability provided by a more structured regulatory environment can provide.
Yeah, that which kind of leads one sense into another question overall is, we see a lot of differences too in the regulations, even state to state, asset to asset. I know personally I bought an asset and all of a sudden they blocked it 3 weeks later in my wallet because you're not permitted in New York to buy Tezos coins. So it took 3 weeks. They let me buy it. It took 3 weeks for them to then they shut down my wallet. And then it took another 3 weeks to figure out how to get extracted in order so I don't lose it altogether. And that confusion across, are those regulations necessary to have, difference across different states, different countries, different industries, or any thoughts on how to kind of simplify or do something about this really hodgepodge of different regulations?
Yeah, I can start, and then I know Beth has some ideas on this too, but I would say that I think there, as we talked about a little bit earlier, having a more structured approach to creating a regulatory framework that identifies risks and then provides what products and services are allowed, I think it would be a helpful step. For me, being located in Wyoming, and really, quite frankly, feel that Wyoming's legislative framework is a really important part of our business, just because they are so progressive in this area. That's an advantage for us. So in some regards, I don't really want other states to catch up, but I do think that there needs to be some consistency from a U.S. federal perspective, so that there isn't so much uncertainty. And as Beth said earlier, this uncertainty really causes risk and fluctuation, and that's actually causing more risk to the system than simply having a well thought out regulatory framework.
Yeah, I go of two minds with this topic. One is that as America, right, we are based on interstate commerce, and we are based on the United States and being able to easily do business from state to state. So having the experience that you had, David, from where I sit, I think we need to avoid that. Now, how we avoid that can simply be many different models, right? One model could be just the same way we have Delaware as a leader in corporate law, and the other states sort of follow suit. Our economy, we've figured it out. If you have a contract in Wyoming and you have a contract in New York, and you have two counterparties that want a different jurisdiction, they're all pretty happy to compromise and agree to Delaware law. Wouldn't it be great if we got to the point, at least in the interim, while we waited for something more sustainable and systemic, that we could at least have a more rational alphabet soup, so that those that are getting into the space don't go to Bermuda or BVI or some of the other jurisdictions that Julie mentioned. Of course, I'm here in New York, so I would love for the fact that that there could be a really good balance between, I think Julie called it a bridge, right, between traditional finance and innovation. And I love the fact that I've benefited from some really innovative thinking where the regulator was uncomfortable giving a trust charter, said, okay, one of the best practices for governance is to have someone on your board, have a trustee that understands internal controls. So this way, the regulator took a balanced approach and said, it's not just for the regulators to regulate. If you have management and then you have oversight of management with someone that's not just on the business side, but has good business acumen, but also is an expert on the internal controls, I felt like that was a pretty innovative approach. And I'm hopeful that we'll, it's probably going to be some time before we have complete continuity and a lot of certainty. But in the interim, if the states could work together and get some sort of agreement like we have for banking or for securities, where you have the state regulators get together, right? And the state regulators figure out some way in which interstate commerce can be reasonable and the leaders can be leaders, and it's all good for the innovation. I think that would be really great.
Yeah, and maybe that comes back to like the level of maturity and a race to get there as well, because you see it in the insurance industry, it's state by state, but at least there's some framework. And then personally, I'm not an expert in regulation, but as a consumer, at least you start to see, okay, here's the exception in this state. Here's the exception in this state. So you have some sense of how to work your way around this.
And you have like a state regulators, like in the insurance industry, right? All the industries we talk about. You have all the state regulators that get together and collaborate. They still compete, but then you have trade associations that do the same. So,
and don't forget, and internationally, it's going to be critical as well.
Of course, yes.
Yeah, that's a great point. And Beth, I know you mentioned the board that you sit on for compliance, and there is a trade association. There's several new just forming within the digital asset space, and one that I'm involved in is the Global Digital Asset Cryptocurrency Association, so GDCA. And they are global, and there's a lot of members in the US, but they've been really active in education and now getting involved with the infrastructure bill. Good news, crypto is no longer fringe. Bad news, now it's going to be taxed in a way that people don't really see how this is going to work. So I think that there are industry groups that can help to sort of bridge that gap and be state to state and provide a voice for those in the industry and help to provide education. But I think it's going to be an iterative process, and we've got a lot of work to do.
I know we have some others, but I'm now looking at the chat, and I haven't really read them, but it might be worthwhile just to start going down some of these questions. Those we could answer, great. Those we can't, we might get back to them. But I'm looking at one, so I'll read them off. I'll read the first one. We're currently, as a banking industry, providing input into Basel on their crypto consultation paper. Can you broach Poly Network's hack and the expectation for banks to own vulnerability assessments, ICT governance issues, fraud risk broadly? And maybe I'll ask Julie first, simply because you own a bank.
Sure, yeah. So I would start out and just say that that's one of the benefits of being a regulated institution, is that banks are required to demonstrate a strong and effective enterprise risk management program. And included in that is a really strong cybersecurity program, which includes the appropriate testing for cyber risk. So that, and not only is the bank and the board of directors who oversee the bank really helping to ensure that that is strong, we have a regulator that comes in and tests it. And we also will have an independent third-party audit performing audits on an annual basis. So there's really a lot of, I would say, assurances to clients to know that there is a robust risk management program, including cybersecurity. And I would also say to the Basel, I know that they are asking for responses, and so that I think that, you know, they may be a bit on the conservative side right now, but I think that they're asking good questions, and they're starting to differentiate between different types of assets, and do these assets hold more risk than other types. And so, you know, they're looking at it, I think, beginning to look at it in the right way and getting more information. So as we've said all along, there's a really great opportunity to be involved in the process and to help educate.
Yeah, and although I agree with everything that Julie said, I would also add, when we look at the fintech industry, the fintech industry is not fully regulated and has all of the infrastructure that Julie described, but it's certainly more mature, to use your word, David, than the blockchain industry. And that in private contracts, everyone that works with each other is requiring these types of controls, whether it's they require a SOC report, they require pen testing, they require the transparency with the incidents. So I think there's room for both models. Where there isn't room is to go ahead and launch and take all this personal information and not have a good way to deal with what I'll call a predictable surprise. I do love the fact that because personally I get pretty grumpy when I get all these letters about all these breaches that happened years ago and I'm just finding out about it. I love the fact that this new industry is going to Twitter, right? And is saying, here's what happened. I also think it's super interesting that they ask the hacker sometimes to give back the money, and they do. But the reason why we need the controls that Julie was talking about is because we're also talking about data. We're not talking about the actual digital assets. We're talking about the data, which for many is just as valuable, if not more so. So the controls certainly are crucial. And regardless, if you get into the space, regardless of the model that you choose, you should be able, and you should be, at least where I sit, you should be very thoughtful if you're management or a board member to make sure you understand and try and mitigate these risks, because they will be relevant.
Absolutely.
And interesting, I mean, that's for, just coming from a technical perspective, while yet the regulations need to be there, people have to look at it, meaning the banks know a little bit differently, because there are some fundamental differences of how you actually go about mitigating some of these risks. Who owns them and stuff is one thing. And I'll just give you one example. The traditional nature of a bank is very centralized. Everything you own, the assets are sitting in your systems, you own your systems, you put it in, something goes wrong, you could often go back, reverse it, update it, figure out how to do it. The blockchain, in the way this works for you, it's a decentralized model. And the second you make that transaction, you no longer as a bank have control over that anymore. And it fundamentally changes how you have to manage that. And I mean, some of it comes down to managing these keys. Once somebody gets the keys, that's it. They really own everything else that's going on downstream. So technically the decentralized approach does actually change the nature of the risk, but even more of a reason, I think, to necessarily protect people and figure out what the risk is.
And I feel like that's to your first question, David. That's why if the regulatory regime, they don't sort of stop and try and understand the products, if you just apply the wrong controls, you may miss some of the risks. And when I think of some of the letters I just mentioned, they're from a financial institution that I haven't been doing business with for 7 years. So when I think about that, you say, wow, there is an opportunity with the decentralized model to eliminate certain risks, right? So this way, when you're talking about protection, it really is instead of bolting on like version 1.0, you move forward. And I think, I guess your point really focused on this, which is it's hard to do this without an expert because it is complex.
Yeah, almost impossible to do without an expert. And you talk to very intelligent people and they all have a lot of limited understanding from that perspective. Okay. I'm just going to read the next. It says regulation has always been aimed to the least sophisticated. Witness the regs on mutual funds versus H&W aimed products. This is just a statement. There need to be regs to protect both as appropriate. But then they ask, will we go to principles or rules-based in regulation? I suspect this administration would tend to rules-based, ignoring the political element, but it's a good, I guess, good question. Any thoughts on principle versus rule-based in regulation?
I'll kick us off, and I'm sure Julie has a lot to say as a former regulator in, where the OCC is just known for being one of the smartest regulators and the best to deal with. And having been on the other side of some of the examinations, I could reiterate that sentiment. I think I would start by taking an issue with a little bit of the beginning of the question, because I do believe there are exemptions and exclusions and lots of regulation in US as well as European law that really has a perspective if one proves to be a high net worth individual and be sophisticated in the sense of having some sort of investment acumen. So I do think there's precedent there. But then as your questioner may also be aware of, that's just a big debate, because when you think of, let's just talk about private funds, and in America, there are rules if you're sophisticated. In Europe, there isn't. So some could say in Europe, if you're less affluent, you still have access to the best products. Whereas in the United States, you need to have a certain affluence in order to have access to the private funds that hypothetically could deliver more of a return than an ETF or a mutual fund. And the ETFs and the mutual funds in 2021 are fairly expensive. That said, when you think about rules versus principles, you've always, if you look back, you can hear some US regulators say, sure, look at the European regs that are principle-based, and you'll find an entire rule book that's behind it. So I assume that what we'll see will be a hybrid, which is similar to what we see for FTC, for, consumer protection and the tech space, or the SEC, or as I mentioned, the OCC. And just before I turn it over to Julie, one other point would be, she had mentioned, I'll just call it a self-regulatory organization, an SRO. And when we look at securities and we look at what FINRA has done for what I talked about, penny stocks and micro cap securities, I think there's a role here there's a lot of trade associations and collaborative groups, which is amazing. But there is room for one leader. So this way it can truly be the SRO. And then the entrants and the participants are able to strike the right balance of having too many rules or having a prudential principle-based regulation that doesn't give enough guidance, that you still are in a world of uncertainty.
Great,
Julie.
great. Yeah, great points, Beth. And I'd like to comment on the point of your suggestion that it's really a combination. It's not rules versus principles, because I think in this quickly evolving and changing space, to develop specific rules would not be able to anticipate what's going to happen for next year. And so that in itself, I think, stifles innovation. So I think the hybrid, I think by having only principles, though, it's difficult, and you're constantly kind of going back and assessing, okay, how does this fit within that framework? So I think a combination with some clear guidance is really what's going to be best for the industry. And to your point of access to wealth creation, that's one of the things that is very exciting about the space to me, is that I think it helps to democratize the access, or at least expand, so that more people have access to earlier investments in where some of those really big pops are. And so I think, ensuring that there's enough information around that, people can make informed decisions, but that they can have access to that, I think is really a very wonderful idea, and is happening.
Very interesting. I had a couple other thoughts, but I want to jump on to the next question, just for the sake of time on that as well. It says, Julie, you mentioned qualified custodian as a regulated entity on the state level in Wyoming. In your opinion, does that meet the definition of qualified custodian by the SEC?
Well, luckily, you don't have to rely on my opinion, because yes, absolutely, it does, and it's actually part of the regulation. So the state of Wyoming and the blockchain coalition that worked on those regulations very astutely used the SEC guidance and incorporated that into their legislative structure. So that yes, an SPDI by definition does meet the SEC qualified custodian requirements.
Oh, okay, that's both good to know and comforting. Oh, here's an interesting question. So we are 11 years into cryptocurrency. Regulators are starting to put their hands around it, but they want to treat it like normal securities, fiat money. My opinion, cryptocurrency is really about the rise of the people's money, not fiat money. Do you agree that cryptocurrency is a new era in money, and can any regulations apply to this peer-to-peer ephemeral money? Probably a lot of thoughts in various parts about breaking that down, but if you want, feel free to attack that question. And
I love that you're getting.
You want.
I love that you're getting all these great questions. So I'm going to thank all the participants. It makes it much more interesting for us. I do agree with the question in that when you think of the internet, many believe that it really was about communication. It wasn't supposed to be about e-commerce. So you now have the internet where you have this bolted on e-commerce, and it's not secure. Our data isn't protected, as we were just talking about with the previous question. So it's now ripe for e-commerce to be on a different platform, like the blockchain. And David, I think you gave some examples of why, if you don't think of this as a brand new foundation, you really can make some mistakes. And I am hopeful, as Julie said, that this does increase the access. So if I think there were some really sort of sad examples about the tragedy in Afghanistan, and the fact that the Afghanis weren't able to get the funding because some of the traditional funders sort of closed down shop. Whereas if the Afghanis had digital assets, they would still have access to a store of value. So, yeah, I think I am agreeing with the question in that we are entering a whole new space. I still, as a regulatory and legal geek, I still really do think it does need some framework, though, to protect those individuals.
I absolutely agree. I think we are on the cusp of huge change in how we look at money. What is a store of value? Also, what is just whether it's P2P or some other type of payment rails? I think a much more efficient and frictionless payment system globally is really evolving quickly, and a lot of it has to do with this digital asset space. So I think that will continue, and like Beth, I think that having guardrails and effective support around that to help ensure that there is, I don't believe in completely trustless transactions at this point, and I think that there is room for the confirmation of some regulatory framework for entities to participate within to provide some level of safety and assurance.
Interesting. So, I mean, that is some of the fundamental things of why it's so different.
Yeah.
From that perspective. But people, there is a balance between completely wide open and having some control and framework over it. I think that'll be the interesting thing. Okay, there's one more here, and I don't know if this is just an opinion or, well, I'll read it. If it's an opinion, it's opinion. But it says, my opinion, so I'm assuming that, but then it asks a question, I think. There will be infinite forms of money, value, cryptocurrency. They will pop into and out of existence, maybe only existing for a moment. They will be wireless and falling into your phone as you walk around. They will be created by machines as needed and traded between machines without any human involvement. How can regulators be involved in this specific future money system without stifling its agility? Monies, in parentheses, monies that appear, disappear, dynamically created and traded only by non-human actors, not investments. I don't know if you've had any thoughts. It sounds like using machine to machine to pay for services, for example, I'm assuming from one to the next.
Yeah, I feel like what we've talked about over the last hour takes that into account.
Yeah.
So when I think about, if I just gave Julie $10, no one is regulating that. It's, it's just cash to cash. Like, yeah, if I went, like I feel like that's a transaction, and that actual transaction isn't being regulated. Other parts of the ecosystem are, but not the fact that I just give Julie $10. I also think that, like, Venmo, when you think of Venmo and you think of PayPal versus you think of using Chase, Zelle, like, we already have this very odd, people are sharing money, whether it's in a decentralized manner, an exchange, a full bank, or a money transmitter. And we already have all different ways in which, think about gold, right? Think about different commodities, think about collectibles. Like, we already have that, but it does feel as though it's getting into the next level of complexity, and we have to match that complexity, but I feel like it's already there.
Yeah, I would agree. Money that appears and disappears sounds a little concerning, but I agree that with the existing payment systems that are there, some are centralized, some are decentralized, and the most open is still cash, but certainly we can, through Venmo and others, move cash or the balances very quickly and easily. So hopefully that answers their question.
I would suspect there still is kind of a control point somewhere that money gets into the system.
Yeah, and I think the leap for me, though, Julie, is that Julie and Beth, in our example, are trusting a non-bank to handle the money, right? And this is sort of what I was talking about with the stable coin wars, because we already, and we could probably spend another hour debating it, like, why is Venmo and PayPal allowed to offer the same services as a fully regulated entity? And as users, are we getting the same protection? Or, and I think it just depends to the person who had the opinion / question. It's how you're using it. Because for the Venmo example, right, we're just talking about simple transactions, whereas if one wants more complex services, you're going to go to an entity that's regulated differently. But those basic services really are a hodgepodge right now.
Well, and I think stablecoin and CBDC, that whole concept is moving quickly, and I think that, and not to put them in the same basket because they're certainly very different, but I think a lot of utility is available there as we move forward in this space.
It's interesting. I tell you, related to that, we're actually building initially it's used as a ticketing and then an electronic cash payment system for the continent of Africa. And in that case, one of the design principles, it's got to handle people being able to make payments that, quote, unbankable. People who don't have bank accounts be able to do that. The control is you literally put money in to buy enough tokens that it might be equivalent to 10 Bitcoins, whatever it is. But once you have it, you then make all the transactions without any cost to anybody. You make them to merchant, you make them to each other. And there is no, so in that case, the control point is at the point of just when you purchase it and when you return it, when you cash it in. But the entire interaction all along is literally for anybody. They don't necessarily need to have bank accounts, but there's enough control in place that it's safe. No one can steal each other's money off that card. So it might, I think we'll see too, it's going to depend on the nature of the transactions and stuff that we're actually doing along there.
And that'll be fun to watch it as it evolves, because like we're at this inflection point where I've had more than one conversation with senior citizens, right, who say, okay, got my money in a bank, I'm paying a monthly fee, I have to pay fees if I do more than a certain amount of minimal transactions, I'm getting negative interest rate, and they have all my money so that they can use it and lend it and do whatever they want. And you say, it feels like an inflection point, because it doesn't matter where you are in the age bracket. You say, there's got to be, like, your project sounds pretty awesome, but we also want to make sure, as we've been talking about, that that you have someone like your organization to make sure it's secure. Because it doesn't make any sense to pay all those fees and not get paid for the bank having all your money, but you also don't want to have your money taken from you because of a security breach.
That's the primary reason they went to a security company to actually build it. Somebody else is providing the payment protocol, but they went to a security company to build it because the number one issue there is to make sure that this thing is actually safe and no one can do it. And the business behind it is, and there are no transaction fees every time you pay for something. There's a lot of fees in the system that you start.
There are a lot of fees in the system. Yes.
That everybody's getting it.
And it is exciting to see what's happening, especially in Africa. I think they are really being so progressive and thoughtful in sort of leapfrogging over some of the systems that we've used, and looking forward to see how can we do this in a better way to help reach those who currently don't have a banking account, but they are a part of the economy and need to be able to have access. And how do we reduce some of the fluctuation as well? One of the organizations that I'm involved with is working to create a commodities-backed stablecoin and to help in payments with farmers and to their entities. And really some of that is just to take out the fluctuation and the risk in the day-to-day system.
Yeah, and it's a huge number of people. I don't know the statistics, but I actually think it's probably the majority in the world.
And it can be so helpful to the people. I mean, that's what's so exciting. I mean, it can be done well and safely. It can be so impactful.
Yeah, and there's the use case, as you said already, with M-Pesa, which has been around for quite a while. And there's just a lot of really great use cases where it's worked, right? So hopefully our US regulators will look overseas and see some really great use cases.
Right.
Yes. Well, we tend to be a little more narrow in our view a lot of times, but sometimes the rest of the world exists, sometimes it doesn't. But hey, I know we're running past, so I'm certain if we got together, we could keep going for 3 more hours. I think we'll stop here, but I definitely want to thank both of you. I personally have learned a lot. I enjoy listening much more than I enjoy participating, because I get a lot more out of it that way personally. But I really want to thank you and thank everybody else who's tuned in and listened, and great questions. There are some more comments as well, mostly more comments even on the chat for those who want to read through those as well. So thank you, everybody, and enjoy the rest of the day.
Yeah, thank you. Great
Thank
questions
you.
from the audience. And thank you, David. Thanks, Beth. Take care.
Thank you
Enjoy.
both.
Take
Stay
care. Bye.
safe. Bye.